I don't want to work. I want to stay home and... Yep. Home Depot, guys. HD. That ticker can be found on the New York Stock Exchange, Consumer Cyclicals, Industry, Home Improvement Products and Services, Retailers. Monthly candle chart. Sideways. Explode. Up. Danger. I want to break down. No. Get back up. That was a pretty nice stage 2. Oh, starting to go far away. Hard pullbacks. Go back up. Crazy pullback. And here we are today. So if you didn't trust this close below previously defined monthly support breakdown line, then you have a continuation the next month when price action went back under. Buyers try to bring it all the way back up to the 12-month average. Sellers, and now you're D below. November is not over yet, but a crazy long red candle like that. A lot of damage. Gonna need some churn. And if it doesn't go down right away or go down hard to the next support, it's gonna go back in, and before this becomes playable in a upwards target, it's gonna need some zigzagging, sideways zigzag. All right. So here's my implied measure move. All the way down to a 145, 146. It could hit some support, some turbulence here around the 156. Previously defined. Where's my arrows, guys? Previously defined resistance turn support. All the way through natural support right here. So you could expect maybe a bounce here. Whoa. Something like that. And then down. All these levels you hit, you could sink through, price action close above. Then after that, if the buyers come in, then it's their turn to try to give it a go to test that previously support, now turn resistance. And check it out. Ooh, 12-month average going down. Good entry points right here. Good entry points right here. Bounce off the 12-month moving average. Especially if that test fails. So the first target, you could actually reduce it, and you want to get out right before you hit that potential support right here, just to make sure you get out. So that'd be the more conservative target to get there faster and not live through multiple months of pullback and down, pullback and up. Remember this monthly candle chart? You want to get in at the breakdown. You want to get out as fast as possible. And that's the implied measure move at that target right here to increase your chances of reaching it. But all this, we have a downwards move, a downwards target, no matter which one it is. 12-month range is starting to go downwards, and that is part of the tenets of Stan Weinstein's stage analysis. Is where is the trend on the higher time frame, and we have established that it's going down. Remove all drawing tools. Where are we on the weekly? Let's get my arrows. Look at that. Underperforming the SPX. Whoa, look at that. It's nasty. Nasty here. Crescendo, increasing red volume. Nasty there. Sword strikes. The more the volume, the more blood that was spilled. And you need a lot of green band-aids to get you back into the game, guys. Damage. Why does that not stay? What? Okay, here. Going down. See the red overlay? Right here, it's not red all the time because you need the three conditions, those 3 points. Underperforming the SPX, check. That's the line. 30-week average declining, check, and price action below 30-week average, check. But right here with that price action going back up, you're actually slowing down the 30-week average decline, and it's not declining anymore. It's getting a pop back up. So it's not fully red, but we're continuing right here with that price action staying below the red, below that 30-week average. Now it's really declining. Timber. What else? Weight of evidence below the Ichimoku cloud. Check. See the Ichimoku cloud? Yeah. Kind of froze that there. Let's pull back up. Where did it pull back up to? Usually it's going to pull back up to previously defined support and resistance. And it didn't pull back up to this embryonic breakdown here. So this breakdown here, not getting tested. It's too high up. But this here, this previous consolidation, 1, 2, 3, 4, 5 weeks consolidation, breakout. And now this is support here at where it broke out, and natural support here at these bottoms here. Breakdown through that, pull back up, refuted, and that gives you clues that this continuation breakdown is in the works, guys. That would have been a pretty good entry point right here. Ichimoku cloud, not super duper that you have to go through it again. I would rather that next pullback that we're going to get, that's going to test. When we start hitting some more weekly defined. Hold on. No. Let's look at. I removed all my lines. Pat, why'd you remove all the lines? Right here. This is the first line of support we're going to get. Important monthly defined support right here. How is that going to look on the weekly? Here's the bounce back up here, and then go down. So the next entry point is going to be, I don't know how the 30-week average is going to look like, but here it's going to be a great entry point. Now you're really below the cloud. Now you've had a lot of price action below the 30-week average, really declining. You're going to see that resistance is going to hold. You're not going to go back up this one. Lower highs, continuing lower highs, downtrend, solid downtrend. And remember the other clues you're going to look at. You're going to make sure that those green volume candles are not super high. They're contracting on the way back up. And you're going to want to wait for the law. Remember, the price action goes down. You're going to keep underperforming the SPX, which is great in the stage 4 decline. But after that, when the price action pulls back, you're actually going to, SPX might start overperforming you or slowing down your underperforming of it. And then when it starts going back down, that lull here, the V shape, upside down V shape, it's going to coincide with the V shape here, that pullback here. So you see here, right there, and then it's going to give you clues. Okay, that's the pullback. Coincides with this support level, turn resistance right here at the 172 level. Everything check, and then great risk reward. Then you're going to give another go to go through that support. And then you're in. That's the stage 4 downtrend, guys. Then you use Stan Weinstein exit strategies, how to get out, trendline violations. If ever you get a 3.1, 2, 3 break on the 4th, then you're out. Pullbacks. When the price action starts going back down, you move your sell stop here, the trader's way, investors a little higher. Pullback, price action starts going back down to previous lows. Sell stop here. I don't know where the 30-week average is. Above 30-week average if you're in investor's way, etc. So either those two mechanisms to take half your position off the trendline violation, take a full position off your sell stop below the lull, above 30-week average, investor's way. And your final clue. Oh, let's move that. Final clue is price action starting to go sideways. And right here on a break of the 30-week average, you're not going anywhere anymore. You want to be out just in case that becomes a stage 1, that continues as stage 2. There's no reason to be there. You want it to be there in the full acceleration down where everybody's saying sell, 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 when there started to be indecision, and then sellers, I guess the price is low enough, and buyers say, hey, the price is low, I want to get in. That's all that time you want to save. You want to get out. All right? That's the tools to get out, not your emotions, not what the news say. And at the bottom here, people are going to say, this is going bankrupt. This is the end of the world for Home Depot. But you know better. You've been looking at the chart. You see that people buying and selling are telling you a different story, and that's what you're going to listen. Enter when over here, exit, worst case down here, take your profits, move on. You know everything now. You have the weight of evidence. You know what to look at. Everything should be crystallized. All right. That's it, Home Depot. Subscribe, guys, if you like this. All right. Ciao.